has said. But the stock that came out with results on Friday evening was ITC. And there were a lot of moving parts to this, some good, some not so. Mangalam is here to summarize all of that and, of course, what brokerages are making of it as well. Mangalam.
Well, ITC reported a mixed set of numbers where the revenues actually beat expectations, but margins were actually a lot lower than what the street was expecting. So as a result of which, mixed set coming in and the stock price is reflecting that as well. No great shakes on either side. Mild green is what we're seeing. And the reason for that is because, one, while all the other FMCG stocks have done well, ITC has been a bit of an underperformer there. And valuations support ITC as well, as they always have at 22 times two-year forward earnings. If you look at the overall numbers, revenues closer to that 1,907.50 crores, much above street expectations of 17,650 crores as well. But as you go lower, the EBITDA at 6,261 crores, the street was working with a number upwards of 6,300 crores, and there's been a near 500 basis points disappointment on the margins too. The net profit has come in at 4,900 crores. The street was working with a number a little over 5,000 crores itself. So what was good? The revenue beat was led by, the cigarette revenue growth and the cigarette volume growth. Cigarette volume growth upwards of 6% is actually the highest that we've seen in the last many quarters, but that has had an impact on their margins as well, because leaf tobacco inflation was fairly high, though the company believes that going forward that may see signs of coming down or receding given the sort of crop prices that we've seen for this season. The FMCG business, there's been a margin decline of almost 180 basis points year on year on that one as well. Notwithstanding, quarter on quarter, there's been a near 60 basis points improvement. The second thing that led the revenue growth, apart from the cigarette business, which is the mainstay of the company, is agriculture. The agri-trading business saw revenue growth of almost 40% versus street expectations of 20 to 25%. This was one led by higher realizations, and secondly, by favorable policy on the exports as well. So while this has done well in this quarter, going forward, whether this continues to do well or not is something we'll watch out for, since the government has gone ahead and imposed restrictions on wheat export once again. All said and done, mixed quarter and mixed performance for the stock right now.
A mixed performance indeed. Mangalam, thank you for that update on ITC. As we take a short break here.